Most traders get trapped, and it's not because they're wrong. It's because they don't understand how smart money actually set the trap. I'll be breaking down the fake out / the manipulation step by step to show you exactly how the trap is actually set. Without further ado, let's get straight into this video. Let's get into the strategy, how to trade with the trap and not inside of it. This isn't a magic pattern, it's a blueprint that the market makers follow. Let's go over the strategy step by step. The first thing we have to understand is our trend bias. Are we in a clear uptrend or a clear downtrend? Mainly on the higher time frames, I look for this on the daily, the 4-hour, or the 1 hour, depending on the type of trader you are, either a scalper or a day trader. I'm looking for is price creating higher highs. I'm looking for his prices creating higher highs and higher lows. This means that we are in a clear bullish trend. Or is price creating lower lows and lower highs? This means we're in a clear bearish trend. As you can see for the schematic, price is creating higher highs and higher lows. Higher highs and higher lows. This means that we are in a higher time frame bullish trend. And right here, price is creating lower highs and lower lows. Lower highs and lower lows. This classifies that we are in a clear downtrend. So this right here is our higher time frame bias. If we are in a higher time frame bullish trend, I want for price to pull back in a discount zone to then for price to continue this higher time frame bullish trend. If we're in a higher time frame bearish trend, I want for price to pull back in a premium zone to then continue this higher time frame bearish trend. That's why it's so important that we trade with the trend. For number 2 is that we wait for the trap. This is where price consolidates. It fakes a breakout against the trend. It breaks a support in a bullish trend or resistance in a bearish trend. Retail traders enter in the short thinking is a reversal. This is when the institutions step in and buy. You must wait. As you can see right here, this is our consolidation range. Liquidity is building above and below this zone right here. A lot of traders, they get caught up in these ranges because on the lower time frames, right, you could catch lower time frame reversals. But if you zoom out right on the 15 minutes and you see that this right here is a 15-minute and price is not really breaking out, you should not be trading inside a consolidation range. We should always wait for the fake out to happen because price will either clear the high and the low. As you can see, price push down lower to clear the low to then extend higher. This is where we get our market structure shift, our trend reversal. But we can't get this market structure shift until we get this fake out, because it's this fake out, a lot of traders is thinking that we're ready to go short, but in reality, right, price is just faking out to clear the below liquidity to then quickly expand higher and giving us our market structure shift. And then for number 3 is that we enter on the confirmation candle back into the range. Price rejects the fake out and closes back inside the range. This right here is your entry signal. You're now riding with smart money, not chasing retail emotion. After we get our market structure shifts, this right here has confirmed our trend reversal. This is where now we wait for our pattern to show during our kill zone time. Make sure you stay tuned to the end of the video. I'll be going over the exact times that we look for this right here. So we're looking for our time. After price give us our market structure shift, as you can see here, price breaks through this internal range high. That first pullback is usually a inducement low. So we usually want to see price push down lower to clear this inducement low or during our kill zone time and mitigate our zone to then extend higher. The best thing about this strategy, right, that I love the most is that it doesn't require a lot of time. For us personally, I trade the New York session. You only really have to be on the charts for about an hour or 2 hours. For number 4 is we set our stop loss in our target setup. Your stop loss is below the fake out wick. This right here is the bullish setup and above the wick for a bearish setup. As you can see right here, if we're looking to go long, right, and you place a trade, your stop loss is below these old lows right here. This is where you trail your stop loss, as you can see right here, because these lows become safe lows. With every break of structure, price won't fail lower to break these old lows. Just like right here, for a bearish trend, your stop loss go above the candlestick wick of the prior highs, because these become protected highs. This will cause strong highs, a strong high, and a strong high. All of this will push price down lower to clear all these lows down. For our first take profit is the next structure level. As you can see, if you catch this sell right here, your first take profit is these old lows. Right here, these old lows right here. You're always targeting the next structure liquidity pool. And your second take profit is you let it ride with partials, and if you have a higher time frame support structure for a higher time frame continuation. So say you took your partials right here, you took enough, but on the higher time frames we have this old low down here, and you're looking for price to push down here. So on the higher time frames you could place this as your higher time frame, but you already booked your partials, so just in case price pull back, you already took some profits to then extend lower to clear these lows down here. And then a optional key is to trail your stop loss using higher lows and lower highs. That's what I personally do. Me personally, because I don't like to be on the charts all day long, right? Unless I just place a trade for like a swing trade, I always trail my stop loss. If I took a trade right here, right, I'm trailing my stop loss as it goes. With break new highs, I'm trailing it just in case price pull back. I could just take my trade. I don't have to endure like a big pullback and give all my profits away, right? But this strategy right here is just a basic strategy. I hope you took notes on this. Now I'm going to go on the charts and show you how to applicate this exact strategy. And now we're on our charts. Like I stated, the first thing we have to do is do a top-down analysis. As you can see, we're now on the 4-hour time frames. The first thing I have to do is I always try to see what is the trend. What is the higher time frame did, right? What did the higher time frame do? So on the 4-hour, price pushed down lower to clear these old lows, and now price is showing me a higher time frame bullish trend where we're getting higher lows and higher highs, higher lows, higher highs, higher lows and higher highs. This means that price is now in a higher time frame bullish pattern. This is all I need for my daily bias. I just need to understand what is the higher time frame is showing me and where is the next draw on liquidity. So we see that price left this old high right here. This old high made this old low, but we see price extend lower to clear this old low. This makes this right here a weak high, right? Price didn't give us a full body break of structure of this low, so this is not a protected high. A lot of liquidity is hiding above this old high. After price cleared this pool of liquidity, what is the next recent pool of liquidity? This pool of liquidity. Once price clears sell side liquidity, expect for price now to extend higher to clear buy side liquidity. So on the lower time frames, when I scale down, all I'll be looking for is just a pullback to a discount array during my kill zone time for price to extend higher to clear this high. But this right here is my daily bias. I do this every single day. This is what I call my top down analysis. This is where I found my trend and my draw on liquidity. Now let's scale down on the 1 hour, the 30 minutes, and the 15 to refine this even more. And now let's scale down to the 1 hour. And as you can see, marked in gray is my Asian session. This is my trusty Asian range indicator. I show this all the time. It's called Range Box by Nephew Sam. All of this do is just marks out the Asian. The Asian session is a point of liquidity for us. Liquidity is hiding above and below the Asian session, right? So we can see right here, after price manipulated these 4-hour lows and rallied higher and give us a lower time frame break, price gave us a new dealing range, right? You may say this strong wick, but this strong wick right here is just this strong rejection wick. Price may want to put it back lower to mitigate this wick right here. But an important thing we have to understand is that price always uses the zone's nearest liquidity. So where is our nearest point of liquidity? It's really these Asian lows down here. Now let's scale down even lower to the 15-minute time frames. So what I want to see for price to push down lower and give me a 15-minute liquidity sweep of this old low. So as you can see, price pushed down lower and gave me that 15-minute liquidity sweep. Now I have to scale down even lower. Now let's go down to the 5 minutes time frames. And now I'm on the 5 minutes, just like I stated, this is our fake out, right? First, we have our accumulation where price is building orders inside of this range. Liquidity is below and above this dealing range. For price to give us our distribution, we have to first give a fake out. So price give us this 15-minute liquidity sweep. The second thing I look for is my market structure shift. Price extend higher and give me this break of this internal range high. It's a couple ways I can take this trade. This right here is classified as our breaker order block, right? It's the last bullish candlestick before price pushed down lower and gave us this liquidity, right? So this last bullish candle, right, you label it a breaker. Perfect right here. So my entry all during the kill zone times, right? I don't know if I stated. The kill zone times is between 7 a.m. to 2 p.m. Eastern Standard Time. 7 a.m. to 2 p.m. Eastern Standard Time. This is on all pairs, GBP/USD, indices, mainly like the main big pairs, right? But a lot of pairs during the New York session. You have the New York session kill zone. That's when I personally trade. This strategy right here works perfectly for this session. The New York session kill zone. So after our manipulation, I get my market structure shift, and then on that pullback, I want to see price pull back and use a breaker. So we see that price left this breaker, my entry right at the open of that breaker. And where am I targeting, right? I'm gonna target this old high of here, right? Price already pushed up higher to clear this high. So on that pullback, let's see, as you can see, price pull back. Look how violent this move was. Man, this was crazy. This is insane. Like look at the time too. This was around like 9:30, right? This is that 9:30 breakout open for the US 30, right? For the new US 30, NASDAQ, US 30, and XSP 500, we have a 9:30 breakout. If you can be on the charts early and already anticipate this for this to happen, man, you can catch one of the like craziest trades, right? This right here, as you can see, first we had our accumulation, then price gave us our manipulation of the Asian session low. So then we got our market structure shift, and on that 9:30 breakout during the New York session kill zone, where am I looking for price to target? This is my second take profit, my third, and my final take profit up here, right? Let's see if we can get for price to violently extend higher to clear this final high. But just like I stated, me personally, I only look for about 50 to 100 points for my trades, right? I don't try to catch the big, I don't try to hold my trades for the big moves, right? I only trade between this session right here. So I only hold my trades for the second for about 100 points. If I get 100 points, I'm out of the trade, right? Or if I reach like a prior high, like this right here, I would have took my trade right at that order block open right here. But this strategy works every single week on multiple pairs, and you can backtest it and see it for yourself. Well, this is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.